Eric Muathe, Muathe.com. What I'm going to do here is going to take advantage of this stock that has done well over the last month or so and make a video, an additional video on my series, Muathe's Gap Up Indicator. Because if you take a look at this daily chart, and this happens to be a 3-month daily, and I'm showing a 3-month daily so we can take a look at some of the areas where the stock has gapped up. There was a gap up here on the daily, another gap up on the daily, a gap up here, gap up here, 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 and also here. So the stock had lots of gap ups, and I just want to discuss this because it's a good example, and we should save some of these charts so we can study. And for those of you who like the idea of buying a stock late in the day with a chance of gapping up the next morning, well, it's something we can use for reference. And so that's why I've just decided to make this video. So it's kind of like you know, I didn't have a lot of time to prepare the video. I just know that I've noticed the stock's been doing well, and I just wanted to make a video. So if it seems like it's not well prepared, maybe because I'm doing it on the fly, but it's gonna be a good one. So now here is the key. Now if you're in the business of trying to find the quickest way to make a buck or two, which means owning a stock overnight and you wake up in the next morning it's up 10%, 5%, 20%, you know, something of that range. You have those types of desires, or it's a strategy you can employ from time to time. The thing here is you don't have to put all your money in this kind of strategy. You know, you can diversify your portfolio. So you have a portfolio here. You know, you can diversify different sectors. You can have different strategies for a portion of your portfolio, and some part, you know, one small part of your portfolio can be speculation. You know, so one tiny bit of your portfolio can be speculation out of the whole complex of your portfolio, and that just keeps you interested in the market and also just makes things interesting. We all need a little bit of fun and excitement from time to time. So this video is for those of you who are looking for gap up indicators. Now, I was gonna say the most important thing in making sure that you can play this strategy is a couple of things. There's some minimum requirements, if I can call them that. This works best if the sector or if the stock that you're trading is already in an uptrend. In other words, if the sector, very important, the sector should be doing well, or the theme sector, and it is also imperative that you, especially if your instrument or stock tends to move in the same direction as the market, it is imperative that you have a sector in a bullish trend or the theme be in a bullish trend, and the market, this is the key, the market should be in a bullish trend. Now if you're playing gap up indicator in a bullish market and you're playing a momentum stock, chances are it's gonna gap up if the market is already hot. So that's, you know, that's the background. In other words, you can't just, it's a bad idea to try and implement in an extreme bear market environment, because you're fighting the forces. You know, it's like planning a wedding in a bad weather time of the year, right? So you might plan a wedding 1-2 years down the road in a period where the weather tends to be good. You never know, the exact day of your wedding could be a major rainstorm. You don't know that, but all you know that you want to plan and give yourself the best opportunity for good weather. So if you want to play this instrument or this strategy, excuse me, the key here is you got to make sure that there's momentum. This momentum should be in your face, and the sector should also be doing well, or the theme. The reason why I say that is, this is a way to play natural gas. Now if I show you what the natural gas index is doing right now, it is exact opposite. So the theme here has been natural gas been going down in the US from $9 all the way to about $7 in about 2-3 weeks. So the theme, the big theme, was down. All right, so this is why this has made sense. Now let's go back and now set this. So you got a theme that is going down. In fact, you can see this portion here showing that it already went down. It moved below 30.90 right here, which is somewhere around there, and it was down. And then again here you see that it moved below 30.90, which is somewhere around here. So the momentum was always down. All right, so that's what I'm saying. You got to figure out where the energy is giving you the highest probability for success, even though there is no such thing as 100% strategy. And if this is something that is, I talk about this all the time, you do not want to own a stock that is below 30.90. In fact, if anything, you want to sell it and you want to short that momentum, because it's self-evident. Take a look at what's happening here. Right now, I want to switch this again and show you what I'm talking about here before I go to the short-term charts. Take a look at KOLD. Now this is the same instrument. So now the two instruments that I'm discussing here, KOLD, which is 2 times short UNG, right? So it's 2 times short this instrument, and the other one is DGAZ, or DGAZ, which is 3 times short this instrument. So it's pretty much, they are pretty much all the same. But I want to show you why this made sense to play the gap up indicator. If you take a look at KOLD, it had already pushed its monthly RSI above 69.1. Now 69.1 is just another way of calling it 30.9. Right, and I'll, if I don't forget, I'll have a video description showing how these numbers all relate to one number, the 61.8 or 38.2, which is the same thing. So all these numbers, in fact, all these 4 numbers are the same. It just depends on how you're looking at it. All these numbers are derived from the same indicator here, or for the same number, 61.8 or 1.618, which has a symbol of phi, or is called phi. All these numbers are phi. I think it's absolutely important to understand how this plays out, and I'll have a link on the description going into details about that. But let me just spend a second there. All these numbers that I talk about are all derivatives of this number, 61.618 or phi. Symbol, oh, the symbol is not, symbol is something like that. All right, this is all these numbers come from. So let's go back to the chart here, and what we see here, once this jumped above 69.1, you knew that there was going to be some type of momentum to the upside. Right now, we went long, and I was recommending this stock because of the chart. So let's take a look at the chart here. Breakout in price, that's why we were looking at this one for the breakout. It was also pushing its monthly RSI to 3-year highs, and I'm only setting this so you can understand how you can trade short term once you figure out the big time frame. So you figured out the big picture is the sector, the market. Now you want to look at the you want to look at the monthly charts. Take a look at the weekly, take a look at the daily, before you can ever consider what to do with the hourly chart and or the minute chart. But you always want to start with big picture: market, sector, monthly, weekly, daily, hourly, and then minute chart. You gotta start with the big picture and come down. And I find that most people don't even look at the big picture, and that's wrong, in my opinion, because you cannot avoid to understand what's going on in the big picture and expect the small time frame to be favorable for you. And we can also see a breakout here on the MACDs while the RSI was breaking out. So you can see that this already met the minimum requirement, and so the stock was doing well. That's what I'm getting at. Take a look at the weekly. Now let me go back, because you might wonder why I'm not showing DGAS. I want to show UNG first. Remember, these are derivatives of natural gas, and once natural gas moved below 30.9 on the monthly, you know what that means. That means sell signal, right? So you're playing momentum here. You're playing momentum. You don't care what the news story is. You don't care what anybody says. You know the fact that you're trading below 30.90 means you're in trouble. Where do we see this type of action? Take a look at crude oil, and I bet you're paying gas. You're paying less for your gas. Why? Because crude oil has been trading below 30.90 over the last 2 months. Another instrument that tracks crude oil on the monthly. So here we're looking at sector performance. This ETF, which tracks crude oil, has been trading below 30.90 on the monthly, going back about 6 months. And that's why it has moved from $20 all the way to the current lows here under 11. Why? Simply because it has traded below 30.90. So because natural gas was below 30.90, you can see that. So back to natural gas. So bear with me. I know sometimes my videos can be lengthy, but bear with me. So we broke here to fresh moves below to 3-year lows and also below 30.90. It's important to note this is a move to fresh 3-year lows also. That's a major sell signal. And so you have to look at the inverse, and the inverse trade is DGAZ. Right? And let's go to the monthly here. You can see the monthly right now is trading above 69.1 for the first time ever. In other words, it is at its strongest ever, which explains this, right? But you want to play the gap up, any potential gap up. Now take a look at the weekly chart for this instrument. It is absolutely power. I mean, this is what you're looking for. You close here on a weekly basis, right? And then you had 2 weeks of rest, which is 2 weeks below that close, and then you blasted above that on the 4th week, which I call week number 4. So this is ideal. You need at least 2 weeks of rest or longer. So you got 2 weeks, which is the minimum, and then on the subsequent week after 2 weeks of rest, you get this absolute perfectly looking breakout. So you can see here it also pushes its weekly RSI, it pushes its weekly RSI above 69.1, and guess what's going to happen when that's taking place? You can see because of this strength, and because KOLD, the other instrument, is already trading above 69.1 on the monthly, and because UNG, the main instrument, is trading below 30.90, you got momentum in your favor if you want to play this to the upside. Take a look at this gap up here on the weekly chart. Why? Because the RSI is above 69.1. This is the key. You want all the charts that you're looking at to be trading above 69.1 to give you the best chance for a gap up. All right. So during this period, don't be scared of this move here. People are scared because the books and the websites talk about markets being overbought. I don't know where they get this idea, because you see that the books will tell you, and early on in my trading career I always used to think that it was overbought, which meant, that word by itself connotates that you should get out. Overbought means you shouldn't be looking at it to buy. I bring a different view of this, and I say anything above 70 or above 69.1 is actually a sign of strength. Keep in mind it's called relative strength indicator. Underline the word strength. Strength. Why? Because that's strength, and we are all looking for strength. So if the strength is at the most relative it's ever been, why should you avoid a stock? And the charts prove it, that this is not an area of overboughtness, if I can say that, quotation mark, but it is really an area of superior strength. So the weeklies are good, the monthlies are good. We go to the dailies, and the dailies are looking absolutely fantastic. So you can see them during this period here in the month of late October, and late October, during this period here, you can see there were some gap ups as the RSI is holding above what? 69.1. So we can see that what I'm getting at here is, for you to get gap ups in a stock, you need to insist that the monthlies, weeklies, dailies, and also the hourlies are trading above 69.1. And if we look at this time frame here during this nice move in late October, let's take a look at a 6 months daily so we can see that more clearly, or maybe 3 months. So okay, here's a 3 months chart. and we're talking about this period here, and I can confirm that there were a couple of gap ups. Gap up here, nice gap up here, nice gap up here, all this period, because the RSI was trading at above 69.1. Check mark. So now let's take a look at the current period. This is the daily chart. You can see, because the daily is superior, showing you absolute relative strength above 69.1. Since then, we've seen a couple of gap up during this day here, overnight gap up here, overnight gap up here. I think lots of gap ups actually, and this was, I think, a 10% gap up, and another gap up the subsequent day, another almost 8% gap up. Why? Because the RSI was above 69.1. So there you have it. Now just want to take a look at the hourly chart, because the hourly chart also gives you good indication of what's happening. And so here we're looking at a 3-month hourly chart. I just want to take a look at this period here, where your RSI closes. When the RSI is closing above 69.1 as the end of the day, and what happens the next day, right? And you can see that during this period here, this major gap up here, which was, I believe, was about 11% gap up, was because the RSI at that particular point was trading above 69.1, and the next day it gapped up again. I believe that was another 8% gap up, an additional 8% gap up the subsequent day, again because the RSI was at above 69.1. And you can see during this blip period here, there were some gap ups. Gap up here and a gap up here the next day. Both, why? Because the RSIs were already above 69.1 at the close of the previous day. So we are seeing this number pop up everywhere. Let's take a look at the 5-minute chart. And the 5-minute chart shows very nicely. Take a look at the magnitude of this gap and this gap, and even a gap like right there. So, and there's another gap up here. Now you have to understand that all this is taking place for the most part because you got your daily chart. Let's take a look at the daily. Yes, let's see how I can do this. Go to daily charts. Bear with me here. All this is taking place during this period now. Now I've just gone back and shown the same 10-day period. You can see how the RSI on the daily was trading above that level, above 69.1. So your RSI on the daily was absolutely strong, very, very strong. So your gap ups were coming because of this strength. And also we can see that that is confirmed very well on the hourly. Let's take a look at the hourly here, and you can see that all these gap ups are coming with your RSI for the most part, while the RSI is trading above 69.1 on the hourly. Now keep in mind, on my hourly charts I am using RSI period of 26, and sometimes I use 21. Really, it makes no difference either it's 26 or 21. Either one works. 21 is good. I would say go with 21 if you're deciding to pick one, because 21 is part of the Fibonacci series. You know, Fibonacci series 0, 1, 2, 3, 5, 8, 13, and then 21, 34 next. So I like to go 21 because it's part of the Fibonacci series if you're picking one. But key here is the RSI being above 69.1. If you're looking for gap up indicators, so let's do this one more time. All right, take a look at KOLD, which is a sister stock, and you can borrow from a sister stock. The sister stock was already trading above 69.1 on the monthly, so that gives you some reason to think that the stock could gap up. We can see the RSI holding above 69.1. Strength, the daily holding above 69.1. The hourlies doing the same thing. So this one was set up for gapping up just because of the strength of the monthly, weekly, and daily for the most part. So there you have it. This gap up video for the most part seems to stick to the hourly chart being at the very least, insisting that your hourly chart has the RSI already trading above 69.1. And if you really want to get this right, you got to insist that your dailies are trading above 69.1. You got to insist that your weeklies are above 69.1 and that your monthly chart is also very, very strong. And also, before you do that, the first thing you have to do is make sure that the market is playing in your favor, right? So the market should be in your favor, moving in a direction, and the sector, there should be something broad taking place with the sector that you can use as a backdrop for why you are drilling down to find the next gap up. So I hope this helps you. Keep in mind, make sure the hourly chart is trading above 69.1 if you want to have some success. Wish you all the best in your trades. Hope those gap up indicators have the ability of making you some nice returns overnight. Eric Muathe, Muathe.com. Wishing you all the best. Good luck as always. Peace and blessings. EACS.